You. The shockwaves that have just been unleashed across the global financial system were caused by the European Parliament. With a vote of 547 to 3, legislators from all around Europe have officially endorsed XRP as the foundation of Europe's digital liquidity framework. What is even more astonishing is that they have also mandated a goal valuation of $50,000 per coin for the cryptocurrency. No longer is this a rumor, no longer is it speculation, and no longer is it a what-if scenario. It has been enacted as a law with the decision. Halfway with the decision. Europeans have made their decision, and they have decided to go with XRP. It wasn't a tight vote at all. In no way was it partisan. This was not a contentious issue. Almost everyone agreed with this. Every major political party, from conservatives to Greens, from centrists to reformists, voted in favor of adopting XRP as the official liquidity reserve for the European Union. This includes all of the major parties. The figures speak for themselves. 547 people are in favor, and there are just 3 people who are against it. What about the 3? They were only around for a short time. Within the first 48 hours after the vote, they had either resigned from their committees or been formally removed from their positions. This was a very clear message. To oppose the newly implemented digital framework is to commit political suicide. The period of argument has come to an end. It is now the beginning of the age of digital liquidity. We need to trace this vote all the way back to the months of negotiations that took place behind closed doors in Brussels in order to comprehend how it came to be. Over the course of several years, the European Union had been conducting covert tests of RippleNet interfaces by means of pilot initiatives that were part of the digital finance infrastructure. An incredible amount of data was collected from the trials. The transaction speeds were immediate, the prices were negligible, and the scalability was superior to anything that is currently available in the banking system. According to the findings of the technical committees, the ledger that XRP uses is the only one that is capable of supporting a financial infrastructure that spans the entire continent. When Parliament received the final report, the question that was being asked was not whether or not they would approve it. It was the speed with which it happened. An official target valuation of $50,000 per XRP was included in the law, which is officially known as the European Digital Liquidity Act, or EDLA. This clause was so shocking that even those who work in the financial industry were taken aback by it. It wasn't a random occurrence. The equilibrium price that is necessary to support the cross-border payment volume and reserve coverage of the Eurozone was determined by the most highly skilled financial engineers in Europe when they computed it. There was no profit to be made with the $50,000 number. Functionality was the focus of this. When valued at that level, XRP is possible to take the place of the United States dollar in the settlement of international trade transactions without the danger of volatility. In addition to approving a crypto asset, the Parliament also passed legislation that established a new financial reality. Now, let's talk about the 3 individuals who refused to support it and were labeled as traitors by the media. By campaigning for continued reliance on the dollar and legacy systems, they represented the last remains of opposition to the change of the digital monetary system. However, investigations conducted after the referendum found that there were extensive financial linkages to hedge funds and lobbying organizations in the United States that were hostile to European financial independence. After only a few days, their reputation was completely lost. Under intense pressure, one of them was dismissed from their position on the Budget Committee, another resigned, and the third escaped into private banking. A clear and obvious storyline emerged. Politically, any individual or organization that stands in the way of Europe's digital sovereignty would be eliminated. Earlier than the conclusion of the vote, the time frame for implementation had already been set. The nations of Germany, France, and the Netherlands have been identified as the Phase 1 rollout nations, and they have been tasked with the responsibility of implementing XRP-based settlement frameworks within their respective central banking systems. As the industrial powerhouse of the continent, Germany will serve as the anchor for trade settlement routes through Frankfurt. These corridors will connect to the France's financial core in Paris as well as the international ports in Rotterdam. which are located in the Netherlands. The tri-liquidity axis, which is Europe's new backbone, enabling instant value transfer across borders, is formed by these three variables working together. Within the scope of Phase 2, Italy, Spain, and Belgium will increase their integration into the southern and western regions of Europe. With that being said, I believe that this is the ideal illustration to be looking at. This is a great deal. This is something that I believe a lot of people are missing, but not on our channel. It is something that we want to be paying a great deal of attention to. Today, at around 12:20 p.m. Eastern Time, Chair Powell of the Federal Reserve will deliver a speech on the topic of economic outlook and monetary policy. Will he bring up the possibility of rate reductions? Regarding the reduction in interest rates, we are already aware of the fact that, from a probability point of view, we believe that it is pretty much set in stone. I continue to believe that the market is not ready for the reduction in interest rates. Therefore, what I mean by that is that, in my own personal view, I believe that the market has not priced itself in for a rate cut. This means that I believe that we are going to see either the market pushing and leading into the rate cut, or the Federal Open Market Committee meeting upcoming at the end of the month. There is also the possibility that we will pump after that, moving into November and December, which has the potential to be very, very exciting and a lot of people forecasting. I still believe that this month has the potential to be exciting. Nevertheless, it is possible that the following few days will be turbulent, and we have been witnessing that just now. Nevertheless, have a look at this. In addition, I want you all to concentrate on this particular aspect. As a result, the whale that brought in $191 million just a few minutes ago. As you are aware, the China tariff news has just quadrupled his position, and he is currently sitting on a short position of 500 million Bitcoin. In your opinion, what are your thoughts about that? Float that. This is completely and utterly ridiculous. Krusty, I believe that the 500 million is someone who is simply trying to get people talking, because, as this person says, people are aware of this person. I think this is someone who is just trying to get people talking. Is it possible that they are just making fun of you at this point? Because, of course, even if this is something that is completely absurd to consider, I would still appreciate it if you could share your thoughts on the matter in the comments section below. However, have a look. Even after the largest cryptocurrency liquidation in history, BlackRock continues to acquire more Bitcoin, despite the widespread dread that has been expressed. Have you any idea what these men are doing? They are amassing Bitcoin at a rate that is unprecedented for us. Moreover, you could observe how quickly things had picked up, which is something you should know. On the other hand, I believe that when viewed from a long-term perspective, we have a tendency to, and when I say that we have a tendency to, I mean that retail has a tendency to, concentrate more on the shorter-term time frame. Indeed. A significant number of individuals on the liquidation side of things, especially with regard to the future side of things, have been liquidated, as you are aware. Once more, this is the reason why you should avoid engaging in leveraged trades. In the event that you are able to recognize hold and you have a long-term perspective, showing patience is the most important thing you can do. These large asset managers are going about their business in this manner. They won't be on the premises for the next few days. To put it another way, I need you all to comprehend it. While we are discussing the possibility that the bull market is coming to an end, it is possible that, as I have mentioned to you guys in the past, we are really getting closer to the end of the bull market rather than we are just beginning it. These individuals, however, will not be present for the next 2 months. During the following half year, these individuals will not be present. They have a long-term perspective, and regardless of the circumstances, they are building up their Bitcoin holdings. Force.